as you grow, you have more resources to reinvest back into the client experience and into your team. You want to start thinking strategically about what those additional services should be to add value to the client, to dig deeper into a pathway that you've already set for yourself. So that's kind of who we are. And we just want to stay on the cutting edge of it as we grow and we have more resources to build that out.
Hey, everybody. Welcome back to another episode of The Connected Advisor. I'm your host, Kyle Van Pelt, co-founder and CEO of MileMarker. And today I am joined by Sammy Azzouz. Sammy is the president and CEO of Heritage Financial Services. They are a wonderful Boston-based wealth management firm that works with affluent families looking to maximize their wealth and legacy. One of the things I really like about Sammy and why we wanted to have him on is his mission is to educate and better the financial lives of others of all walks of life. And his success has led him to be in financial publications like Barron's, Forbes. He's been included in Investopedia's top 100 list. So we've got a wonderful advisor here. Sammy's also the author of a book called Beyond the Basics, which is about maximizing, allocating, and protecting your capital. And he's a fellow podcast host. He hosts a great podcast called Wealthy Behavior. So do make sure you go check that out after this episode as well for some great content. Sammy, thanks so much for joining the show.
Oh, thanks a lot for having me and that very kind introduction.
Absolutely, man. I think we're going to have a great conversation today. But most of the people who listen to this know I tend to start off with the same question for everybody. You're not going to be any different. So spending as much time in it as I have in this industry, I've found everybody has a different path to how they got here. Some people really traditional, like I knew I wanted to be an advisor. I went to school for it. Maybe one of my relatives was one or something like that. And other people like myself, much more sort of different winding paths to this space. We call it your money moment. So what we have found is no matter what your path was, traditional or untraditional, there was some moment in your life where you said, this is what I want to do. I want to help people with this. This is what I want to make my career out of. So for Sammy, for you, what was your money moment?
Yeah, I think it was kind of in between the Sidewinder and direct path. I went to law school straight out of college thinking that is what I wanted to do, be a lawyer. And as I was going through law school, I realized I did not enjoy it nearly as much as I should if I was going to make a career out of it. I enjoyed certain pieces of it. I liked, reading, kind of thinking about things analytically from a subject matter standpoint. I liked estate and tax stuff. And this was right around, I graduated in 2000. So this was right around, I was in law school through the tech boom and, money and CNBC and stocks. It was all the rage as everybody was talking about, even law students with no money. And I realized that I wanted to help people with their money and use some of the stuff from an estate and tax standpoint, but I wanted to really cover everything and not be siloed or limited to one type of conversation. Because money, I thought, was probably the most stressful thing that people deal with. It's a way to have a lot of impact on their lives if you can help them with it. And back then, before wealth management had really taken off as a concept, there were brokers who could help you with your money. There were insurance folks and there were estate and tax lawyers, but there weren't people who were kind of breaking those silos down and able to have the full spectrum of conversation, which is what I wanted to do. So I lucked into a path where I started eventually by working at a law firm with their estate planning practice that was building an investment subsidiary where, as a young financial advisor who talked like them, who, the lawyers kind of understood and could relate to and passed the bar but wasn't going to practice, I was able to help them with investment and financial planning. I was able to talk about estate tax and insurance, and sort of carved my way to a wealth management career path a little bit earlier than when it took off, I think, later in the decade.
Wow, that's really cool. So a couple questions for you on top of that. Is law school as brutal as everybody says it is?
Yeah, I don't know for sure. I know my experience was not the most pleasant first semester experience. I definitely think our mix of professors was heavy on the Socratic method. You walk in, there's no warm, fuzzy introductions. It's like, hey, tell me about the case on page 2. And as soon as you say a word they don't think you understand, they ask you what that word means. You tell them you don't know. and then they're off to the races. What are you, an idiot? You read stuff you don't understand, you don't look it up. And I would say your view of law school is heavily dependent on how Socratic the mix was. I think they've gotten away from that. And I know not every first year student at our school had that heavy dose, but no, the first semester was pretty painful. It wasn't until well after Thanksgiving, and you're 3-4 weeks out from final exams that are 100% of your grade, where you could even start to even articulate an outline for what the subject matter was you had been bombarded with all month. So it's a new language taught by people who weren't always the friendliest. And you're just, reading and studying until you can't do it anymore.
Oh, man. Yeah, that's wild. And then you said, as a result of that, kind of in part of your money moment, you brought up estate and tax quite a bit. And I think I just want to go on a little bit of a trail there, because I think there's been so many technology solutions and things popping up in our space around estate, around tax planning, things like that. I think advisors have always, at least good advisors, have always helped people with these things, but they tended to refer it out, or there was a whole workflow. But now it seems like there's a lot of innovation happening around estate and tax. So for you, as somebody who kind of was a little bit more versed in that or things like that as you were building your firm, I mean, what do you think about that? Are you excited about a lot of the solutions that are coming out? Do you think they're hitting the mark? Like, give us your take on those things.
Yeah, I think it's a great question. There's been definitely some innovation in the space and some tools that you can use to help you not only summarize, but present your summaries to clients. And so those have been quite useful. There's some tech and cybersecurity implications. The more vendors you use, the more stuff you're pushing outside of your infrastructure to other providers that you always have to balance and understand. And at the end of the day, though, the value add from these estate and tax conversations, and we don't do taxes for clients, we don't prepare estate planning documents, we understand the concepts and try to summarize them. The value add is being able to explain it to the client in a way that they can take value out of the suggestions and understand, some of the techniques that they would benefit from. So the tools don't necessarily help master the communication, but they do make summarizing and preparing for those conversations more efficient, and they make for better output, I think, as well.
Yeah, absolutely. Yeah, I'm curious too, because I think a lot of the conversations we're having with growing firms and that, and I probably sound a little bit like a broken record on these, but it just seems like the pendulum is swinging, right? There was such a growth of firms who went out, maybe got a CFP, maybe they didn't, but they hung their hat on the fact that they were a fee-only fiduciary advisor. And then, all of this stuff, who knows what's going to actually end up happening with it. But the DOL fiduciary rule comes out, everybody has to be a fiduciary. And now that sort of competitive advantage is gone. And it seems to me like the pendulum is swinging back to where firms have to be more full service, right? You can't just say, hey, I'm a fee only asset allocator. The planning is getting deeper. It seems like people are doing more breadth in their planning with estate, with tax, it looks more like a family office in a lot of ways. And so what are your thoughts on that? How would you respond to that statement?
Yeah, I mean, I think that, if you look back, I've been at Heritage for 13 years. The firm's been around for closer to 30. So our founder, Chuck Bean, has a motto when it comes to planning that every detail matters. And so that's been our DNA. It hasn't necessarily been a pendulum shift for us. We want to work with individuals. We want to help them with their planning. We want to help them with their portfolio management. We want to do it in a fiduciary model. So we're limiting conflicts, and we can talk to them about anything that is helpful for them as it relates to their finances. And as a firm like that grows, you do, as the landscape becomes more and more competitive, but also as you grow, you have more resources to reinvest back into the client experience and into your team. You want to start thinking strategically about what those additional services should be to add value to the client, to dig deeper into a pathway that you've already set for yourself. So I don't know that for us, it's changed kind of back and forth as much as that's kind of who we are. And we just want to stay on the cutting edge of it as we grow and we have more resources to build that out.
You brought something up there, which is, you kind of joined Heritage, some time ago. And I think you've got a cool path where you came in as an advisor, you kind of grew as an advisor there. You went up to managing partner, then to president, and now president and CEO. I'd love for you to just kind of share for us a little bit of that path and your growth journey at Heritage. Because that is a little different, right? A lot of people will either go start a firm or something along those lines. I think your story is unique, and I think other people would find it fascinating as well.
Yeah, it's a lot of good fortune. I think, being at the law firm for a few years where they had this investment subsidiary, which was a tremendous learning opportunity for me as a young advisor to work with higher net worth clients than I would have found on my own, in my early 20s, and talking to them and learning about sophisticated state and tax concepts and doing it in a way, again, where you're having the term's overused now, but holistic conversations kind of touching on any aspect of finance really was a stroke of good fortune, because as firms started wanting to do more for their clients, money management firms started wanting to do more for their clients, wealth management became more of a thing. A large money manager in upstate New York, who was just managing money for clients essentially, hired me to build out a wealth management practice for them, for their clients nationally, to help them with planning, estate planning, anchor them to their long-term goals, build retirement plans for them. And that was probably the starting point for me in terms of progressing potentially into a management role in the future, or at least it opened the door, because I had to build this practice, I hired for it, kind of built a team, I was managing a P&L, I was developing young advisors, not always well. I was, young and impatient and, made a lot of mistakes on the way, but I was definitely exposed to management concepts. I had to build, P&Ls for new product solutions. I had to hire well. I had to create bonus and compensation structures. And so when I transitioned out of that firm, it went through an IPO, and I wanted to move back to Massachusetts, where I'm from originally. I got to Heritage and I wanted to work with clients and develop business and focus there. But I had this management experience in my background, and I loved working with younger advisors. I wanted another chance to do it at a little bit more mature than kind of being thrown into it in my late 20s. And so just gradually I started managing a few of the folks, and those management responsibilities grew. I had things that I could contribute either officially or unofficially at the management team level, just based on my experiences before. It just kind of grew from there. And, I had very supportive partners who had been there a long time, who were also on the management team. And as we were thinking about what the future of the firm would be, I was a good candidate to, transition into that. I wouldn't say it's full-time management. I still have clients. I still have business development responsibilities, but I'm definitely spending a lot of time, thinking about Heritage and how to make it better for our clients.
That's awesome. And how big is Heritage now, employees wise and things like that?
Yeah, so Heritage is 45 employees, somewhere between 2.7, 2.8 billion, I believe, in terms of assets under management. 3 offices in Massachusetts: Westwood, Woburn, and Rockland. And we're growing nicely, fortunately, just in terms of staff and new clients. And so we're excited about the future and just being part of this dynamic industry.
Yeah, that's awesome. 45 people is not trivial to oversee and manage and things like that. And I think there's lots of conversation too about how to build great culture for employees, hiring. I think some people have talked about the war for talent. And if my notes serve me correct, I believe that Heritage is employee owned. Is that or partially employee owned? Is that correct?
Yeah, Heritage is employee owned. So we have a group of shareholders in addition to our founder and chairman.
That's really cool. Do you think that's a big contributor to building the type of culture that keeps people around and that helps you have a thriving business with 45 plus people?
Yeah, I think employee ownership is important. I think it's important to hold that out to team members if that's the direction they want to go, and give them something to strive for in their careers. And I think it's important for multiple people to be thinking day in and day out, like business owners, what's best for the firm long term. So yeah, owners are definitely better than renters in a company. And I do think it's something important and helpful in our industry.
Yeah, well said, man. Now, I think one of the ways that you've been growing nicely is you all have done some inorganic growth in addition to the organic growth that has happened. Oh, no M&A?
We have not focused on inorganic, but in terms of M&A, we have not done that. We've been an organic growth machine from the get-go.
Oh, that's really cool. Okay, so no M&A. Talk to us then, because I think this is another big piece that's happening in the industry is a huge focus on organic growth. So I feel like, the last couple conferences I've been at, everybody's saying like, hey, we forgot how to grow organically. There's this huge focus turning around like, hey, we got to flex that muscle again. Right. And look, I mean, I don't necessarily blame people, but we had the greatest bull market. I mean, maybe in history, we'll see. Right. But, in our business, your business grows as the market grows. Right. So I think, a couple referrals every year, let the market do its thing. Everybody was growing. It was great. But people kind of forgot how to flex that organic growth muscle. So talk to us a little bit about how you're doing that. How are you finding success in flexing that muscle?
I think it just goes back to, who you are as a firm and who's running your firm, who's founding your firm. We're not deal makers. We're not investment bankers. We're not lawyers running firms trying to, grow shareholder value by collecting assets. We think of ourselves as, really good wealth managers who are trying to deliver the best client experience that we can for a firm of our size. And when you're doing that, you're just trying to, fuel that word of mouth growth engine, have happy clients, have, professional advisors in the network that think of you as a top place for their clients, people networking within the area, talking about the good things that we can do for clients. It just, to me, is a natural extension of, focusing on being good advisors, being a firm run by advisors, and investment professionals who are thinking of, the client experience first and foremost, and just not a background in deal making or M&A.
Do you feel like a large part of your job is trying to train advisors and other people in the team on how to do the organic growth stuff and how to put that forth?
That was part of my role before I transitioned into the CEO role. I would say, the unofficial director of wealth management. We have a tremendous director of wealth management who also oversees our marketing team, and she is responsible for that, for the career development of our advisors, from our paraplanners, through junior advisor to senior advisor, helping them with their career development, their business development, learning. So we do have that role. It's a dedicated role. I think it's extremely important for a firm like ours. I had some of those responsibilities earlier, but as I transitioned to the CEO role, I was very fortunate to have somebody kind of pick up the baton and do better things with it.
That's cool. I like that. I don't know how many people we speak to that have a dedicated person who's focused on helping train people to be great at that, right? I think everybody we speak to would support any business development or growth efforts or things like that. But that's a unique spin on it, having a full-time person who their job is to help me, if I'm an advisor at Heritage, help me get better at growing my business.
I mean, depending on how you count it, we have approximately 20 professionals within our wealth management teams, right? So 20 out of 45, if you include paraplanners, advisors, different seniority. And so you need somebody who is helping those folks, because not only are we growing organically, we are trying to grow our employee base organically as well, hire great people, develop them, grow through their growth. So to me, it is short-sighted if you don't have a role like that.
This podcast is brought to you by Turncast. We make game-changing content for fintech and financial services companies. Learn more at turncast.com.
As somebody who runs a technology company, I'd be remiss if I didn't ask you a little bit about this. But, the way your firm's growing, the way you're doing things, talk to us a little bit about the technology stack that Heritage is using to support advisors and help them grow.
I would say that from a tech stack standpoint, we have the basics that folks have. We're using Tamarack on the CRM, portfolio reporting, trading. I think plugged into the Microsoft universe umbrella, I think gives us kind of a lot of confidence from a cyber standpoint. Outside of that, we're managing outside assets where we can through Pontera. Used to be Bile accounts for our smaller clients and kids of clients who want to interact with us in a different way. We're using Betterment for advisors to kind of white label an efficient ETF portfolio for them. So technology is obviously a focus. We're looking to grow our use of technology, get more analytics out of our systems. We're definitely have a tremendous COO, Melissa Madison, who's focused on cyber and protecting us from that standpoint, but also improving our tech infrastructure strategically as we can, and affordably as well.
Yeah. My ears perked up when you talked about analytics. That's a big thing that we do. So would love to hear you, like, what kind of analytics would be useful to you? Like, talk to us a little bit about your vision for better using analytics at a growing firm.
Yeah, I would say if you look at the topics we've talked about today so far, business development and organic growth, I think there's a lot of analytics you can get out of your systems if you could, related to growth, just in terms of, what's your lead time in terms of onboarding a client? Are there inefficiencies there that make it easier for the client and shorten that time frame? Are there things that happen during the onboarding process? Potential clients spend a lot of time getting information to us, and they obviously are reaching out to us because they need help, and somebody likely told them to connect with us. So what can we do to increase the odds that we end up, taking advantage of that time that they've put in for them and for us? So are there steps along the way that are leading to people not going through our onboarding process? Are there things that are happening that are making it less likely that they become clients? Are there ways to predict, what will lead to, a good eventual long-term client? We have a great process for onboarding prospective clients. We tend to be very successful with it, but some of those statistics are anecdotal. Are there ways that you can, increase some of that and drive better outcomes if you can see that information? And then outside of growth, each department has KPIs, or should have KPIs that they build out that they want to track. And it's a good process to identify what those would be and then build the dashboards for them in order to, I would say, help them just do their jobs within each department better and more efficiently, but also as the firm grows to be able to manage things more efficiently as well.
Yeah, well said, man. That's awesome. Okay, so we've been talking about technology. We've been talking about growth, things like that. I'd love to move to a segment. I don't have a great name for the segment, but I want you to just get your crystal ball out. We're going to talk a little bit about where we think the industry is going. You've been talking about where we are and where you've been, which I love. I know sitting in the seat you're in, part of your job is to think about where are things going to be 3 years from now, 5 years from now. There's lots of buzz and jargon going on around the industry, all of that sort of fun stuff. But Sammy, where you sit, what do you think the future of our industry looks like, and what are you preparing for?
Yeah, I think we are preparing maybe in 3 to 5 years for not a tremendous amount of disruption or change. 3 years comes pretty quick. You blink and there it is. But just in terms of thinking through the evolution or what could be coming next, we are keeping an eye on what these firms that are growing inorganically through constant acquisitions and mergers, what's their end game? What are they doing this for? Why are they paying what we consider the elevated valuations that they're paying? What's the point of all this? Is the point of all this to do amazing things for clients that they're not able to do now? Is the point to grow shareholder value and have, more profitable exits? Is it a little bit of both, depending on who you're talking to, or is it, something else that we haven't envisioned? So just curious as to where the industry is going and what the point of all this M&A activity really is. We haven't seen many things change in terms of what the bigger competitors are doing. We've heard what they're talking about doing. And so, I'd like to know how that plays out. The idea in and of itself that these mega competitors are something that we have to worry about or we have to kind of latch onto so we don't get left behind. We already compete with some massive financial institutions, right? Publicly traded behemoths and, Vanguard and not publicly traded, but Vanguard, JP Morgan, Merrill Lynch, Morgan Stanley. So the idea that these RIAs are getting so big that they're going to come after us because we can't, do things that they'll be able to do with their size. I'm less worried about that, but just curious, where's this all going and what is it going to lead to? I think the industry right now is extremely collaborative. I'm in 2 to 3 study groups, depending on how you count them. I do think that collaboration will ease off a little bit. I do think there will be more competition as there are fewer players, and just watching that as well.
Yeah, well stated. We had Scott Colangelo from Prime Capital Advisors on here recently, and I think his take on that was, not necessarily to compete against the Heritages or whatever, but can we create, these larger firms that offer types of products that, the Merrills and the Morgans and all of them are able to offer to their advisors, right? Where, maybe Heritage has something that Prime Capital could leverage or, vice versa, et cetera,
Sure.
creating more of a network of solutions so that everybody could offer the same thing. Because, I think most RIAs would make the argument that they can better serve an investor because of, whatever, they don't have to sell proprietary products or et cetera, et cetera. And we don't have to go too deep into that. But I think that's the idea of this big collaboration move is, hey, we, collectively, we all believe RIA is better. That's why we're all RIAs. How do we work better together to fully serve somebody? If I don't have a solution, can I go down the street and, and get it from Sammy on behalf of my clients? Is that kind of what you're alluding to, as well in this, or do you see it a little bit differently?
Yeah, I mean, to me, I do look at the custodians as hopefully longer term being able to provide more solutions to our clients through us in areas that we can't just based on our size compared to them. Whether it's lending, banking, trustee services, retirement plan design, just different things. I don't want to run through the whole list, but I do think there's an opportunity for the custodians to consistently increase what they're able to offer our clients to leverage, those relationships better.
Yeah, well stated. I mean, because I think that's one thing that is often overlooked. RIAs have wonderful partnerships with the large custodians, Fidelity, Schwab, Pershing, et cetera. But the big wirehouses are custody and wealth management, all sort of and banking, all sort of wrapped up
Right.
into one thing. That does make it, a really integrated solution. And I think that is what people are trying to pursue is, hey, we might think we have a better offering. That's why we do this. But hey, we're constantly looking for a more integrated offering, all the way across the board, which is what I think you just described. And I agree, by the way. I think looking at what the custodians are putting out, I think they are pushing as hard as they can to be able to provide a platform that you just described, which is cool. So awesome. I appreciate you sharing that. Any thoughts? So that makes a lot of sense on where the industry's going from firm structure and things along those lines. How about technology? Any technology predictions or prognostications for what happens over the next little bit?
I don't. Maybe I'd ask you. You talk to a lot of us and you're in the tech space. What should I be looking out for?
Yeah, it's interesting, right? Because I think everybody's talking about AI. I actually believe, and I'll talk my book a little bit, right? But I believe AI will not get near the traction people think it will if it can't be deployed on a firm's data, themselves. Like, I don't think firms are going to go take their data and push it out into open and public large language models. I think we're looking at things like ChatGPT and OpenAI and what everybody's doing with that. And we're really excited, but also kind of excited with an arm's length because, the mandates for a firm like yours for cybersecurity, for data protection, for compliance, for all of these things. So I think in order to truly bring the power that we're seeing of all of these AI demos and everything to wealth management, people have to have their own data infrastructure that is within their own walled garden. And then they're going to have to figure out how to apply the AI tools like large language models and things to their firm. And so I think we will see that. I think we will see people figure out how to implement that where, someone like you could come in and maybe query all of your data across everything through a prompt. But it will just be yours. You're not going to be sending your information out or exposing it to the world. So I think from an AI perspective, that's something that we'll see. I still think I actually think there's going to be a lot of growth in the custodian space. I think Altruist is really pushing the envelope a lot. And I think that's causing others to continue to innovate. So those are two areas that I'm excited about. I don't know. Sometimes I'm a little bearish because I feel like a lot of people are creating a lot of the same things like, hey, this is another portfolio management solution that looks a lot like the ones you already use, but it's more modern. So you should like it better. Or, hey, here's another planning solution or something like that. And I'm always interested when I see stuff that I think is a truly different take on the space itself.
Yeah, I mean, I think it's great points. I agree with a lot of what you said. And I just think it's easier to create those portfolio management and planning solutions, right? They're not as, I would say, dependent on the other portions of the tech stack to implement. So you can create, a great custodial offering, but if you can't get data from your CRM there, then what's the point, right? Yeah. But you can layer on a portfolio or planning offering, I would say with much less friction. So I could see why that's the case.
Yeah, I love it, man. Okay, so let's move into our final segment. We call this the Mile Marker Minute. It's kind of a lightning round series of questions, lighthearted and fun.
Okay.
I'm going to ask you some questions. You answer them as fast as you can, and we'll wrap up after that. How's that sound?
Sounds great. Thank you.
Awesome. So for those of you who can't see this on video, Sammy's sitting in front of a wonderful bookcase full of books. So my first lightning round question for you is, what is the best book you read in the past 12 months?
Oh, wow. I would have to, this lightning round is not getting off to a great start because I kind of have to look it up because I don't want to misspeak. You know what? It's kind of a cop-out. Oh, I was going to say, I read James, the novel that's a retelling of Huck Finn from the perspective of Jim. That was a great novel. And then the cop-out was going to be I reread Team of Rivals about Lincoln. Everybody probably could say that that's a great book, and I read it ages ago, and I just reread it. So I guess maybe those would be my two.
Hey, good job. And also kudos for you for not plugging Beyond the Basics. I saw that behind you, but everybody, Sammy wrote a book called Beyond the Basics. Go check it out. I'll plug it for him. I also
it didn't qualify because I haven't read it within the last 12 months or else I would have led with that.
There you go. I love it. I also see back there that you got Poor Charlie's Almanac sitting there. Are you a big Charlie Munger fan?
Definitely. Yeah. I mean, he's, I think I've read almost everything he's written. I've seen a lot of, his video clips. I went to the Berkshire Hathaway meeting once, so I saw him from a million miles away in that auditorium or stadium seating. It was definitely somebody whose advice is tremendous and really with decision making, not just money management. He's a tremendous thought leader and a big loss.
Biggest takeaway from Charlie Munger for you in your career?
I don't know if it's the biggest, but the one that I come back to a lot is this notion of inverting. If you want to think about how to do something, just think about how not to do it. And the other thing that he's big on is just read a ton, right? And read in different areas, read biographies about people that you're in an area that you're interested in, and just build these checklists that you can use to apply what you've learned, and don't be afraid to just excise bad ideas from those checklists.
Well said. If you were not a financial advisor or a lawyer, what type of career do you think you would have pursued?
So, assuming money is no object, if I could have found a way to kind of read and write full time, I'd probably have done that. But in that instance, money was an object, and so I wasn't going to pursue the starving artist path.
Professor Sammy, is that, do we have that in our future?
Something like that. I don't know. Yeah.
Where in the world would you love to travel that you have never been before?
So we've been fortunate to go to some nice places, and I've lived overseas as a youth, but we have never gone to Asia, like, Japan, Korea, China, Thailand, Singapore, that, or New Zealand, Australia. That we've been waiting until we had more time to head that far out. So I definitely would be intrigued to head that far and spend some time out there.
Awesome, man. Well, that concludes the Mile Marker Minute. Thanks so much for your time today. And thanks for coming on and just dropping some wisdom and insight. I really appreciate it and enjoyed the conversation.
Yeah, thanks a lot, Kyle. I really appreciate talking to you and the kind things you had to say. It was a great conversation.
Absolutely. Okay, everybody, that's been another episode of The Connected Advisor. I know I've plugged a couple of the things that Sammy has going on, but you can find him on LinkedIn. You can look up his firm, which will be in the show notes. He's got a great book and he's got a podcast as well. For this podcast, do make sure you click the follow or subscribe button wherever you're listening to this so that you don't miss an episode. And until then, we'll see you on the next one.